Hey, what's up, you guys? Welcome back. In today's video, I'm going to go over the Sandbox. Right now, we are trading at 89.35, 24-hour volume, we are down 8.11%, and market cap, we are up 9.43%. So heading over to our chart here, I'm going to start on a weekly, our daily, and then 1 hour for immediate short term. But if we can take a look here on a weekly chart itself, we can see that we've got two nodes off to the side of our profile volume, indicating some supply and demand zone. So because we are below this area, essentially price is going to retrace or want to come back up to this area here, essentially at the $1 price point, all the way as low as the 95 cents. Now, the reason why I say price is going to lean towards or retrace back to this level is essentially because the last week we have a crossover of our MACD indicator, or sorry, our RSI. So our RSI here is below 20%, considered to be oversold. And initially, when these two lines cross over, it's going to spark a buying opportunity. Now, what we can see here on our candlestick from our previous week is that we retrace closer to 50% of the previous candle itself. So we are getting a lot of strength in the numbers, but also most importantly, the strength of the buyers. So long as we can come up again a little bit over at the 50%, mostly around the 75%, then price is going to retrace to the next area of supply. And as again, we can see on when I zoomed out, it was roughly around the $1 time or $1 dollar amount here. So as we can see again in the MACD indicator, we can see that we are still in the green here. So long as we're in the green, we are going to retest a current area of resistance. If we do flip over from the green to the red, then simply we are going to come up here, come up to the area of resistance, and then get rejected downwards. So taking a look on our daily time frame as well, you guys, we can take a look so far today with this gorgeous green candle, huge stride in the pump today, and this rally itself. We can see at the very bottom, there is really no wick at all. So essentially what happened is in the entire day today, the session occurred from here all the way to here, and the range itself, all we have is a high peak here at 89 cents. So we've got huge impulse of the buyers pushing the price as high as they can, increase of the volume here at 87,000 trades. Now, if you take a look here at our 20 moving average, which is this orange line, it was treated as a resistance, but most importantly as a support here back on September 10th, 11th, and 12th, and then finally broke over as we see the MACD indicator getting lighter in the color. Once again, we are going to retest the 20 MA here as we saw a rejection on September 18th. Take a look at how small the histograms or these bars on our MACD indicator became around this area of interest. Next now is going to be another area of interest again, not only at the 50% of our fib chart at 91 cents, but most importantly around the 20 moving average. Now, the previous candlestick action that we had yesterday initiated a buying opportunity. As we can see, we've seen a crossover. Now, the RSI itself dropped here at 58% of our white line. You notice that the 58% wasn't considered as overbought, but it was essentially from the previous candlestick action of the selling pressure itself. So if we take a look here, we are in the green. We have huge volume. The candlestick range itself is massive and the body itself is massive. And we flipped over from the red to the green. So long as we are getting momentum in our MACD indicators and we see these bars grow on a daily average, we're going to close above the 20 moving average. And on a daily time frame, we're going to look bullish. Going into our 1 hour time frame here, we can see these gorgeous trend line coming up. We're always touching, bouncing up here and creating a lot of high peaks. Now, we are at the essential area of resistance. And if we take a look at the course of action right now, only 10 more minutes until we do close, the candlestick body is quite small. And most importantly, it is found near the bottom. Essentially right now in the candlestick, it being red essentially just means that the sellers are taking charge of this entire 1 hour session, and they may be the winners of this 1 hour. Essentially, whenever we see a candlestick like this, it is resembled as a shooting star candlestick, as the wick at the top is twice the size of the body, and there's really no wick or little of a wick at the very bottom. A shooting star candlestick is basically an exhaustion of this uptrend that we previously saw. So we have a very small pullback, and then push the price higher, resulting in a shooting star candlestick. Now, if the price itself for the next candlestick closes well below of the body of this candlestick of the shooting star, it confirms the downtrend, and we need to make sure we stay closer to this area of our fib here at 61% at 88 cents. Roughly around 88 cents or 87 cents, because if you see that is near the trend line that we have at the bottom here. If we do break this trend line, we are in danger of flipping from this bullish in a short term immediate to more of a bearish. And if you can see, the 20 moving average is retracing. So if we can only predict or assume that 20 moving average is going to move around this line, this area is going to be a very high area of an interest point because it's near our trend line, it's near the 20 moving average, and it's near a key point of our fib chart. So if we do break that area of support, then Sandbox is going to come down to this point of interest and catch ourselves at the support of 86 cents. So that's my video here for Sandbox. Thanks guys so much for watching. Like and subscribe down below, but I'll see you next time.